Hi folks, welcome back to the Amazing Education channel, the Amazing Education station. Well, I'm not a financial advisor, but this is really information that's going to benefit you. It's not financial advice, although I do talk about money. And today's topic is about the stock melt up. It's March of 2022. And also I remind people it's not about the video because it's just my phone. It's about the information. So it's not really something to watch, it's something to listen to. Please like, thumbs up, and subscribe if this is helpful to you. I'm a master educator. Sometimes I've got an IQ over 124. And so if you're just starting out in your financial journey, or if you commonly need advice, well, it's not financial advice, but I am a master educator. So now stocks, you might be investing in stocks, bonds, mutual funds, ETFs. You can look into it, and the rule is always to diversify, and don't over diversify, but you should have probably different assets. For example, maybe real estate, although it can be risky, but less, you might say less risky if it's just your own home, and as long as you have the income to pay for it. Or you can even do rental real estate, but it's easy to borrow too much. So many people say, don't borrow money for rental real estate. Get a mortgage, get a personal mortgage, which actually helps you out with your tax situation. That's right, because you might end up paying no tax whatsoever if you've got a mortgage on your own home. And after 2 years, you can rent out. That's right, rent out your home. You could move to another location, either a house or apartment, and then, you would have to make sure that you have enough of an emergency fund so that if you suddenly find the renters don't pay, or there's an emergency or something like that, you would still be able to make payments for a year or two. Say if there's a fire and you need to rebuild the home, it could take a year or two, and you need insurance and everything like that. So don't just jump in whole hog trying to make millions, because it's a way to lose millions, maybe, go bankrupt. So just be careful, be cautious. And business owners, the small business owners that are the majority of owners of businesses, they're very so-called conservative, meaning cautious. Not to say that they're all consider themselves, say, conservative politically, but very cautious and careful, like not taking huge risks. Starting a business is risky enough, and it's the way to make good money, actually, but so you might diversify into a small business and stocks and bonds. But right now, even precious metals, they say commodities. That could be metals and things like, wheat and other things that are traded, and maybe they're going up in price. But look into it, do your own research, and you need a financial advisor. This is not financial advice. But majority of wealthy people, they don't handle money because they're not experts about investing and financial advice. And they may be experts at lawyering or doctoring or something else, and that's how they make their money. But then to hold on to it, you need a financial expert, because so many people with high incomes, what do? They actually end up having very little in savings, and they often have financial trouble because of overspending. And not to say they don't end up fine later on in life, but they could do much better if they kept track of their finances better. So what's this about a melt up right now? As I mentioned, it's March 2022. What is a melt up? Well, if you take a look at the United States stock markets, and maybe international markets, I'm not so sure about that, but the United States stock markets right now, gosh, they've been going up, up, and down, down, and up, back up again, and they're considered to be incredibly overvalued. We have amazing inflation right now, and it's the excess money printing from the Federal Reserve in collaboration with the government that is causing this amazing surge in prices, and that includes stocks and bonds and those things that are just way up in price because there's so much extra money, dollars that have been printed. It's all available out there, so people are having fun investing it, and it's called a melt up because it's so-called irrational excitement of thinking, just pay more and more for stocks and they'll just go up, and chances are they won't stop, or that's what people believe. This is not the truth, but anyway, so they think it won't stop, or that they'll be able to take their money out in time. Now, if you keep your money in, if you're a true investor instead of a trader, so there's a difference, TRADER versus investor, or investing and trading. Trading, you do something for less than a year and you get your money out. It's a good way to lose money and a good way to make money when the stock market's going up. But it can be sort of addictive, sort of like gambling. And investing, on the other hand, you keep your money in there for more than a year, and you get tax benefits when you sell. Well, pay less taxes anyway, long-term capital gains if you sell at a gain. And so that's a benefit to being an investor. And keeping money usually for longer than 5 years, things are going to go up, usually. And so that's the way to go, is be an investor, and don't be so risky. And why is the melt up dangerous? Well, because everything looks wonderful. People think right now, wow, unemployment hasn't been lower in the last 40 years, maybe even longer, maybe since the 60s. Gosh, that would be maybe 60 years. So unemployment to some people looks wonderful, that we have such low unemployment numbers, but actually it's a risk because it makes everything more expensive. So why do we have low unemployment? Possibly because the economic stimulus has run out. People are no longer receiving pay, just the newly printed inflationary money, which was a bad idea, is no longer coming in, and so they have to get a job. And so now they're all scrambling to find work, and there's very little available. So that's one problem. The other problem is to get employees. The business owners and government, whoever is hiring the employees, now has to offer more, higher pay, and it's going to increase the prices of goods and services. So everything you buy at a store and any services that you need, chances are the costs will go up. It's going to cost you more. You're going to be less wealthy and pay more. And yeah, it's due to the government meddling, that's true. And it was an overreaction to the pandemic situation. Everything would have been fine. There's a phrase called laissez-faire, is a French term meaning just leave us free. Freedom works, and the free market would take care of the problems instead of causing problems like government always does again and again, where we have the value of your dollar, if you have savings, is going down. Some people say by as much as 15 to 25% inflation in the things that you really need. If you need to buy a car, food, your rent, a house. Some places, cost of housing has doubled. You need a house where you live near your work, and hopefully you're not driving around because that's not healthy. So you should be within a 15-minute walk of wherever you work or go to school. And housing prices have doubled. So suddenly, if you need to move, or if you're a renter, maybe your rent is getting close to double. Who knows? It's a tough situation, and then it's a melt up, meaning things sort of end up melting down in the end. And but the stocks look incredible. People get excited. They invest in sort of new technologies because of the worries that they have, and they need to use these new technologies. For example, Zoom, or electric cars, electric vertical takeoff and landing, VTOLs, electric air taxis, and these are just some examples. Virtual reality systems, robots, and so on. And people get very excited because, well, in the long run, these things could save money and benefit the environment, and solar and all that. But with the input costs rising, the commodities price rising, the cost of labor rising, businesses that are just starting out and they need more money, as people say, capital, they need a capital raise. It means they need more cash because they're new at business maybe, or it's a new type of business, whether they're old business folks with experience or not, and things cost more than they expected. They're about to go bankrupt, and now everything suddenly costs more. Banks say, no, we're not lending anymore because the government is raising the interest rates, and pa-bam, we have a meltdown from our melt up. When everything looks the best ever, and maybe the stock market heads back to its new highs, which, happens nearly every year. Stock markets go up, up, up. And, so we have these stock market highs, and people get excited. They borrow more money than ever in the past, ever in history, called margin, to buy stocks. I don't recommend any margin. No derivatives, no futures, no options, puts, calls, forget all about that. That's a wonderful way to lose money, unless you're a genius. If you're a genius, then you'll recover when you go bankrupt, then you'll be fine. But this is a wonderful time to suffer in the melt up. I recommend at least 20, maybe 18% cash, 20%, 25% cash. Gold is going up right now, and so it's hard to say gold is the best alternative to cash, but it might do well. At least it won't go to zero. So don't invest in individual stocks right now, I would say. And if you need the money in the next 5 years, don't have any stocks, bonds, or financial investments other than, say, silver or gold, because if you need the money in the next 5 years, chances are it'll be the same or lower. We could have a major crash with a crazy government situation and instability, and both economic and social, and war and pandemic. So it's a perfect situation where 5 years from now, stocks and investments could be cheaper. Even houses could be cheaper, and it might be a good time to buy at that time. But as I said, if you need the money, we're headed toward a very possible melt up right now. And now this all could be wrong, but just do your own research, take a look, check into it. Things could just keep going up from here. As I said, it's unpredictable, but
Well, that's what I'm saying.
you have to be cautious if you absolutely need the money in the next 5 years. Now, if you don't need the money anytime soon, things will definitely improve somewhere in the world, sometime in the future. And so then don't worry. Hey, even if you